chat with the top management of TCS, and this time around, I would say Samir Milind first. Good to connect with you. Maza nahi aaya numbers. Not the quarter which everybody was anticipating and expecting. From a statement of all is well, things are not looking all that well. Will you agree with me?
All is well. It can be always be better.
It's a quarter where you'll have to perhaps convince the market and shareholders that is there a slowdown and is there an uncertainty which has hit the business in the near term? How would you clear the air? Because that's what everybody wants to know. I can get into a quarterly number here, a height count number here and there, but the bigger concern is that is the big picture slowing down dramatically?
So if you look at it, it's a dichotomy. In the near term, there is a lot of caution. There is a risk averseness. And risk averseness is coming, and if we split that across markets, UK, we called out that early on, about 2-3 quarters back, we started seeing that customers are getting more proactive and starting to make decisions in the times of uncertainty as well. And then we saw that translating into deal wins last time. And if you see this quarter's revenue, it has come in significantly better than most of the other geographies, very well. In Europe, we called out last time that we are seeing change in stance and customers are being proactive. We see a significant number of 50 million plus deals coming in from Europe this quarter, right? And hopefully that trend continues. What has happened is in North America, things changed relatively from what we expected would be just a temporary one into what we saw into February and March. Caused a lot of macro uncertainty and client being a bit risk averse, reflecting into what happened. And we can link it to the financial volatility in the banking system causing it. So near term, there seems to be a bit of concerns, but what gives us confidence is on the long-term picture, the deal wins which we have had, and that's the dichotomy, that while in the near term, clients in some cases have either hit the pause button in terms of stopping some discretionary projects, pausing them, or not starting projects which are not critical. But they are still investing into deals which will help them do longer term transformation ones, deals which will help them optimize cost, or some things which will help them focus on getting faster ROIs. And that is reflecting on our order book, a 10 billion order book, 5 billion coming in from US. BFSI, where there is a lot of concern, we are getting a 3 billion order book. Our typical one is between 2 to 2.5 billion. There also it's 3 billion. So I think in the medium to long term, things will be well.
Define the near term for us, and will things get slightly more volatile before they get better? I'm talking about near term, next 2 quarters, FY24 specifically.
That's where the uncertainty plays out, Nikunj, and we'll have to play it out as it comes. Our focus will be staying close to the customer, staying relevant, and as it plays out, and we are going by what we have seen in the near term in UK. So our expectation is based on that what played out in UK for us, and we see parts of it playing out in Europe. Gets played out in Europe completely, and then in US also. Also, what we have seen is customers have a tendency of there's an immediate impact which comes in, and then they have to rely on technology in some form to get their agendas also. So if they want to take cost takeout in a recessionary scenario, that becomes the biggest imperative one. They'll usually fall back on technology, and that's where we are optimistic that that should play out going forward as well.
So I'll prompt you for a number. When we spoke to NGS last time, he said, look, there is a probability, not a possibility. There is a probability and a possibility of a double-digit growth. Looks like if you're starting the quarter on this kind of a sticky wicket, a double-digit growth for FY24 will be an aspirational number. It will not be a realistic number.
Our aspiration will remain double-digit. Given uncertainty, too difficult to call out how it plays out.
Can I read it between lines?
Don't read between lines. I'm saying it as it is, Nikunj, that our aspiration and focus will be to get to double digit. Let's see how it plays out.
Okay. 1 साल पहले we were talking attrition. Now we are talking about reduction in headcount. A lot has changed. And this kind of volatility is rare in a business like IT, which has a structural tailwind, which is at the curve of a multi-year cloud implementation. 2021, we were talking about moonlighting. Now everyone is saying that forget moon, the sun is also not shining.
So what do you want me to say?
I want to understand how are you managing this entire flux which has come.
See, I think we have been doing it for now 5 decades, so we actually know how to operate this very, very well, looking into all the dimensions of how we need to operate effectively and efficiently, where we need to invest, when we need to invest. How do we basically bring in 30,000 people in the first half of the last year so that we basically go through this kind of things, in a way which is actually, least impact our financials in a negative manner. So, some of these things actually come together so beautifully. Contractor costs, subcontractor costs coming down, visa things are getting up, so we are able to send people and basically also keep them happy in the process. Obviously, business priority is there, but people also are equally important, and they get the opportunity to basically have global assignments. And then, internal optimization. How does that happen? How do we basically deal more with the same? And how do we bring in more automation? All of these things, technology also plays a significant role in driving these optimization decisions along the way. And the demand or the hiring demand does not only depend on business demand. It depends on all the internal factors which I just talked about. And that's how we are able to manage last 2 quarters with 821 and minus 2,500 last 2 quarters, and still able to show the double-digit growth for the year.
Will you be honoring all your commitments in terms of the offers which you've rolled out? Because some of your peers are in double mind. They're delaying offers, they're delaying hiring, even at campus. Would you be honoring everything?
We have honored all the offers, and our people will have already, most of them are already onboarded, some of them are getting onboarded as we speak. And for next year, we already, like I said, we have already had offers of about 46,000 for the campus. And so it's a pipeline which is building for next year as well.
So attrition is not a worry, because that was the biggest concern a year ago. Now it is about maximization and utilization.
Absolutely. Attrition, yes, I think the point is we were at 20.1 compared to 21.3. It's 4.2% quarterly annualized reduction. Although 1.2 on LTM side, but 4.2%.
Is that because the job market has changed?
That is partly, and partly because of us, partly because of what we do with our people, and how do we make sure that they remain engaged. Engagement with purpose is important for us, for our people. Now, how do we keep them engaged at work? Even something which is adjacent to work as well. And that is what has been TCS for many, many years and decades. That does not change. We only improve from there.
Samir, we're talking about decades here, and every decade has seen 2 cycles at least. One sugar rush followed by a drop. If this is the year of volatility, I'm using the word slowdown, you're using the word volatility. How is the 2023 volatility cycle different from the previous cycles?
So let's look at the previous cycles. We could start with GFC. We could start earlier also. In
GFC.
each of the...
I'll
start with GFC. But as you said, we are there for 50 decades, so we have history on it. But on GFC also, what you saw is there was an immediate fall off the cliff, and at that time, the concerns were also very, companies vanished. It's not, you don't expect it coming this time here. But there also, there was an immediate increase in revenue. For TCS, for the next 4 to 5 years, we were in strong double-digit growth. And what drives that is, as I mentioned in our previous conversation also, that technology will then become, and more technology is getting embedded and becoming the driver for change, whether it is in terms of transformation or in terms of getting an organization or an enterprise which is more resilient, agile. So that is something which we believe should play out.
So the GFC crisis lasted for almost 2 years, 2.5 years. Then came the Brexit issue, which also lasted for 2 years. Now, if this is a global slowdown or a realignment of cost or US regional bank or UK or everything put together, will it last for at least 15 to 18 months? Because that's history.
So timing can be plus or minus, but should be in that range. And if you look at it from a TCS perspective, even in the peak of GFC, it was 1 quarter of negative and then positive growth coming in. During Brexit, we used to call out that UK at that time also was growing strong for us. Even during the peak of pandemic, we had 1 quarter of negative and then followed by strong growth coming in. So I wouldn't quantify it as a period because that's the uncertainty. I'd not want to get into a crystal ball gazing thing. But in the range is what we should expect. The medium to long term should definitely be positive.
What to your mind has dramatically changed between 1st of January 2023 and 1st of January 2020, 1st of April? Because there seems to be a change in tone and tonality and the line of communication. I'm not blaming it on I'm not holding it against the commentary, but this is the reality we live in. This is the dynamism of the world. So from a client standpoint, what has changed dramatically?
Absolutely. You called it out right. So what we saw at the beginning of the year, I called out on the UK and Europe side. And what we are saying also, we are seeing incremental positive coming in.
So UK was bad, it is becoming better.
What has played out is on US side of it. What we expected at the beginning of the year, when going into February and March, given the financial volatility which happened and the banking crisis happened, has led to clients being risk averse, cautious, more cautious than usual. And that is what has played out. And the immediate reaction was to put a stop on a significant amount of discretionary projects which were there, projects which can be delayed. They want further certainty before they start projects which are not critical.
Fair point. So, Milind, we've had an extraordinary high attrition rate for the sector per se. Historical hikes or the hikes at least in the last 2 years were above the historical average. Do you see a big change happening there? Will things revert back to the mean? And if that happens, then we are looking at a huge change in terms of the operating cost, margins and other factors.
I will not speculate about others, but I will speak about TCS. Our hikes.
But a good manager always tracks competition, no?
Let me just tell you. Let me start with me, and then I'll touch upon that also. Our hikes this year will be similar to what we have been giving.
Okay.
Especially for high performers, we are definitely are looking to get them to 12 to 15% hikes, and then for 8, 5, 1.5 is kind of that kind of number which is coming in. So that is good. That has always been like this. Actually, better than what we have done in the previous years. So that does not change in spite of all the things which you talk about, margin and cost. That we do it irrespective, and then we again traverse the year right together. I think, and obviously variable pay, quarterly variable pay. All of that is 100% in the last quarter. So we have to keep those things intact, irrespective of what we do, how we manage other things, and that is how TCS has been all along, and it continues to be like that. With respect to overall industry, yes, we have seen many things. We are seeing other companies, smaller companies, letting people go. I'm saying opportunities is open for everybody to take an opportunity in TCS, and people are welcome to apply, and we will obviously glad to have them.
Samir, now TCS even in last 2 or 3 quarters has really struggled to go to the upper end of the margin band, the aspirational margin band when things were looking up. In a volatile environment, what happens to that aspirational margin band? I mean, now it will look like not an aspirational band, but it may look like a dream number.
Okay. So let's look at FY23. We put out a plan in terms of how we'll get back to a thing, and for most of the quarters, we stuck to the plan. Given that there was an immediate fall on revenues, whereas in the short term our cost remains sticky, is where we couldn't exit at 25. I think we have significantly invested into building our cost structures, which would be better, which was starting with, 3-4 quarters back in terms of flattening of pyramid, then looking at not increasingly backfilling attrition with lateral hiring, looking at subcontractor structures, and all of it is a continued exercise where we are looking at cost structures, which will help us. And as I've always said, our long-term cost structures are well placed for us, which we as a management team believe that we can operate in 26 to 28. The volatility impacts in the short term, but we definitely believe once things stabilize, we can revert back to our long-term cost structures, which would be in then operating in a comfortable band of 26.
So Samir, while we can judge the numbers by saying that okay, it was the slowest quarterly growth in last 10 quarters, margins were under pressure despite the currency tailwind. One thing is clear if I summarize by saying the next 2 or 3 quarters would be hard to call given the macro dynamism. Will that be a fair assessment?
Yes, given the uncertainty, we would believe that we'll have to play it one step at a time rather than taking a forward view on it.
And it will be tough to get double-digit growth in FY24.
No, I would still aspire to get to double digit. Depends on how it plays out.
Okay, well, wonderful. Good luck. And
Thank you.
Thank you for joining us. And for the moment, it's back to the studio.